MV3 Traders Futures Trade Radio is brought to you by The Ultimate Trader's Guide, your one-stop shop for the most valuable income-producing information on the internet. Go to ultimatetradersguide.net to learn more. Link in the description below. All right, what's going on? What's going on? How are we doing? It's been a really interesting week. A lot of strong volatility, even though today we got a spread, my neutral zone spread. What was it, like 100 and something points? 190 something points. No, I'm sorry, 238, which is, extremely wide. Kind of beat me up a little bit on my Monday and yesterday, but we still here. Had to make some adjustments. So now we are open. Here -1 showing as a point of supply. Overnight it was a strong point of inventory. It's been like a pivotal point for our, for pre-market, for pre-RTH. Now we're coming back inside the neutral zone. The last hour or so, we've been kind of creating this look below and fail, potential look below and fail situation. Last push right there could be a confirmation of a look below and fail. Maintaining momentum. On that 8:30 news, we quickly took out a lot of work that was done to lift the supply, and now we're coming back inside of that, heading kind of meeting it was a front run of the VWAP back inside of automation. So I wouldn't be surprised to see somewhat of a battle here. Not taking much effort to cover a lot of space this morning. There's a nice inventory response off front running 12,600. There was one thing I forgot to do. Got to turn on my other recording. So we tapped 600, picking up some more inventory there. Did somewhat drop the supply around 615. Sort of in a position right now, kind of holding this from 604. One of my trades messed up. They're gonna be out right here in VWAP. Not sure what happened over there. So I took that from 604 to 640. I dropped one along the way. So now we're going to come back and retest that VWAP area. Understanding that typically we don't spend a whole lot of time around VWAP. They usually do their business around there and keep it moving. If you're not trying to, our wholesale is not necessarily trying to trade VWAP, they're just using it as a marker to serve their customer. And we're quickly making our way back to that previous supply. We picked up some inventory there. We can kind of look at inventory at 620. Gotta take a pause for the calls to see what happened with this other trade window. See what happened. I don't know how that happened. Somehow I was supposed to switch it to micro. So on these widespread days, I switched to micro to reduce the risk. However, it was trading NQ still, so that screwed that up. That was one of the newer evaluation accounts, so I'm probably gonna have to reset that. And that was something that I learned to do over this week. It's been a while to I had switched to e-minis last week, but it's been a while since we had these widespread days. So one of the lessons that I picked up this morning was to, or not this morning, but this week, was to, on these days where we have this strong volatility, is to switch the micros to reduce the risk. And then I'm able to actually just really stick to my strategy the way that I'm supposed to. I need to be able to take some losses in there. And I can take some losses with E-minis, with these funded accounts, but you know that with the trailing drawdown, it makes it difficult to take as many losses as I would have to take to start, to get to the next win. So I had to go ahead and adjust for these days to trade the micros. But somehow I switched this over yesterday to the micros, but somehow I went back to the E-minis. I'm not really sure what happened there. So anyway, now we're being mechanical to automation, and we just picked up some inventory. Our last, seasoned inventory around that 635 area. Did our business around VWAP. Now we're continuing to push the supply. Like we're building the inventory zone around 680. Lifted the supply to 690. Nice little 10-point range. Looks like nothing, but 10-point ranges for NQ is generally significant. Starting to drop the inventory. From here, the key inventory point that I will be looking at, our key point for our inventory, I will be looking at is 650. Because we had that inventory response there at 660, that should hold us. If that breaks down, then we could. If it's reasonable to expect some activity or an inventory hunt. Could possibly, if that happens, could possibly see VWAP, either a front run or a touch of VWAP again. But as of right now, we're holding up this inventory. And as I say that, we come back into 660. Another quick inventory response at 660. So then the inventory is holding. It was a quick lift of the supply. We dip right back into the shop. Basically, our shop is between 690 and 660. Automation sitting above 670, between 670 and 680. That automation is beginning to narrow. That's just an observation. To me, that doesn't really carry any significance from, with how long I've been observing it at this point. We're still holding on to that inventory. Now we got, I'm looking at the inventory range between 665. There's a nice response there. Now it would be reasonable to expect some momentum to carry us into the lift of supply. Still within inside of our session range, so we're not near any key levels there, but we do have a drop off of volume around 700. We're still doing business in our shop, coming back to that inventory. Another inventory response. Has some more business to conduct there. Now we're coming back into the high of this supply area. There we go. We're gonna push the supply one more time. By the way that it happened, we should see a squeeze here, taking the elevator into that volume gap. Supply response in the volume gap. It was a quick little pause there. I was done off that one runner. It's mixing my words up in my mind there, but that I caught earlier. But this would have been in hindsight, of course, hindsight 2020. This would have been a good day to be extremely aggressive. Hard for me to do that while I'm trying to, run the stream, and also I'm only my trade window is cut in half because of trader triggers. I've been thinking of some other ways to do it. So, if you watching have any suggestions of how I can make the show better, I'm always open to ideas. Of course, you can put that in the chat or leave it in the comment section if you're watching this after the fact. Continuing to run the supply. Coming into this overnight session gap, our volume gap. So if I'm looking at a TPO chart, this would be a single print area. The supply response at that volume gap. Start to see some volume pick back up around 734. Created a micro flag pattern. Let's see if we come back into the. All right, we're continuing to push the supply. We are starting to slow down on some momentum. Jump right back on the elevator. There we go. There's a mechanical response to that. That volume area that I just pointed out. 740 give us about 20 points before the session high. We kind of came to this area pretty, with some. Didn't take us too long to get here. So at some point, it would make sense to see some pullback and to see, wholesale take a break and collect some more inventory. They did have the whole session overnight to collect inventory with a lot of volume. So they should have been holding on to a lot of inventory, but I would think at this point, by what we've seen, that they have already paid themselves off of most of that. But never truly know what wholesale's agenda is, and as I say all that, we start to lift the supply one more time, breaking that 740 range, quickly making our way. Let's see if we get a front run here, the session high. Potential front run right there off of mechanically at 750. And there it is. There's the confirmation of that front run. I think I posted on Twitter yesterday. Something to the effect of, the way that they move price around, it kind of makes it feel random. That's not the word I use. I wish, I'm not trading right now. I can actually go look. Oh yeah, I did use random, but it may feel random, but it's actually not. And they just, they repeat themselves a lot. So all participants work off of habits, right? We're habitual. This is people participating in this. I say that a lot, even with our algorithms and all that stuff. Those algorithms were created by people. Automated trading is created by people. People put what they see inside of computers, inside of algorithms to trade for them. So at the end of the day, it's still people. And people are habitual, and we work off of patterns, and you can see these patterns. So it's not random. What we see, it may appear to be random by the way that price moves around. Once we look at the structure and we see the price action, kind of may feel like it's going all over the place, but there's a pattern there. So as traders, what we end up doing as retail traders, using technical analysis, even fundamentals is the same thing. We end up looking for it becomes about pattern recognition. And you can kind of you do this long enough, you can start to kind of intelligently guess what could come next based off of what previously happened. One thing that happens a lot is a lot of front runs of key areas. This is why, I have an area where I'm looking to, maybe if I'm in a trade and I have an area where based off the structure that I'm looking to take profit, I won't let price go all the way to that area, because I know there's a component there that's looking to front run that area. And conduct their business before price actually gets there, so that they can kind of guarantee, or they increase the chances of them fulfilling, whatever objective that they have, profiting from whatever they're trying to do. So I'm just going to use that to my advantage and do the same thing, instead of trying to wait for price to hit this quote unquote resistance or resistance or support area. A lot of times you can kind of use price action to determine when a good place, because I'm not trying to catch the top and the bottom. I just need some space in between where I entered and where I exit, which will give me my profit. I don't necessarily need the top and bottom. Sometimes I've been able to get close to the top and bottom. Very rarely do I ever get the top and bottom. It happens, but it's not something that I'm aiming to do. Got about 4 minutes before halftime. We're coming back to that front run area of 650. We had that nice mechanical response. More than likely, that means an algorithm was used or some form of automation was used to give us that. So we're going to front run that by a point or two. Quickly make our way back down to that previous inventory. Another mechanical response off of automation at 724. And again, all the prices that I point out are ranges. We got ourselves a nice little volatile range here inside of the 750 to 720 area. They're painting this for a potential break or lift of the supply. There's a tap of 750 that we should have had some. There was definitely some shorting that happened at 750. So our seller is still there. Wholesale is still working this area. Not quite ready to leave all the orders that are in that 750 to 720 area, or 750 to 720 shop. But we're still in this markup phase. Wholesalers just doing their no orders left behind thing. A little bit of budgeting. And just because they're painting the picture that way doesn't mean we have to go back to the session high. Could just use that to give us a breakout that we can use to get some more buy participation in there, which should create some stops. And we can use those stops as liquidity. Wholesale do that until they met their inventory quota. Then they'll make a deal and push it one way or the other. I find a lot of benefit to kind of, once I recognized this wholesale concept, and then I internalized it, right? I let it make sense for, I thought about it to how it makes the most sense to me and build my narrative around the wholesale concept. So that's kind of helped me to make trading decisions and to understand what's going on. When my focus is there. Sometimes I just, like Monday, I don't know what kind of space I was in. But when my focus is there, it kind of helps me see like what's going on, understanding this wholesale, how they conduct business. And there we go. We had the B force where we got a nice little, another volatility rush, volatility spike. We're gonna break that inventory. And you would expect to see this to keep pushing, to keep dropping, pushing the inventory. But if it doesn't, that'll give us momentum in the other direction. That could just be wholesale looking to pick up some cheap inventory down there, using the news, using the 30-minute rotation. We know that there's a significant portion of the market, a lot of participants that like to break the market up in 30-minute periods by way of people who look at the TPO chart. So as wholesale, we can use all of that information to serve our customers. And on that note, we are at halftime, so we're going to take a quick break and we'll be right back for another episode of Trader Triggers. See you on the other side. MV3 Traders Futures Trade Radio is brought to you by the Ultimate Trader's Guide, your one-stop shop for the most valuable income-producing information on the internet. Go to ultimatetradersguide.net to learn more. Link in the description below. Welcome to the second half of Futures Trade Radio for another epic episode of Trader Triggers. For those that have been tuning in to this channel for some time, you've probably heard me refer to these charts as a mirror. In my opinion, that also refers to any other form of analysis, because I use technical analysis, including fundamental information that you used to make investment or trading decisions. So for this talk, I'm going to focus more on technical analysis, since that's what I use and I am most familiar with. But what exactly do I mean by these markets being a mirror? We're going to dive deep into my concept, my view of how I see these markets, or these charts being a mirror. So over the next few minutes, I'm going to provide some clarity on my perspective. And by the end of this, you should have a better understanding of my concept, or the mirror concept from my view. And then you will be able to have form an understanding of what it could mean to you. So one frame of view that makes these markets a mirror is because the price action we see requires your participation. Market makers, institutions, whales, anybody with big pockets, they need your execution. And by you, I mean retail traders as a collective. Most retail traders are taught the same basic methods of participating in this business. Typically, you're either going to take breakouts or you're going to take pullbacks. And even when you're trying to, you're not actively trading, that's what you're really, but most retail traders are looking for breakouts and pullbacks. And because breakouts are easier to spot and build consistent strategies around, I see a majority of retail traders gravitating towards breakouts versus pullbacks. Now with this, all breakouts are not traded the same, of course, right? Everybody has their own method. Everybody has their own way of taking these breakouts. I mean, there are some similarities between each individual trader's method, right? And then you have those who go off and they learn the method and then they teach it to others, and then they have other traders copy what they do. But no two traders are every single trader is taking these breakouts, or however they trade, in their own way. So let's go over some of the different ways of approaching a breakout trade, some of the common ways of approaching breakout trading. You could look for a price to fully break out of a range. After you've identified a range, you wait for the price to break outside of that range and just enter on the break. Or after you've identified that range, you could wait for the candle or the bar, or whatever analysis that you're using, to close before taking a break. There are also traders that anticipate the breakout or enter right before the break, typically analyzing other market conditions, other data points for confirmation of some sort of momentum that could result in follow through after the break. You also have traders that like to fade these breakouts, meaning they are looking for some sort of failure after the break to take price in the opposite direction. And once all of those stars align for them, then they take the break in the opposite direction, betting that it's gonna go back inside the range and maybe get followed through the other direction. These are just a few ways traders typically take breakouts, but this creates zones around certain areas that can be used for building liquidity. So this is what the bigger pockets, this is what they look for, and this is what they use. Those with bigger pockets don't really care which method you personally use in and around those breakout zones. They just need you to do whatever that you do so that they can use those orders to position themselves for whatever objective they are trying to achieve. So contrary to popular belief, you do, as a retail trader, play a significant role in the movement of price. Maybe not you individually. And by the way, those bigger pockets are not after you specifically. They don't even know who you are. But you as a member of the collective play a significant role that is necessary for this environment to function the way that it does. Now, on another day, we can talk more about that, about how you can actually use this to your advantage by way of your edge. But for our mirror, we can use this information to observe psychological trigger points between both sides of the market. These trigger points repeat themselves. Once you discover the pattern of these trigger points, you can develop a way to strategically gain statistical edge with the minimal risk. So that's one way of looking at the mirror from your participation, from your active participation, and how those with bigger pockets use your participation for what they're trying to do. Again, I don't recommend to take it personal. This is just business. They're doing the business just like you're doing your business. They're trying to profit just like you're trying to profit. So you can use that knowledge, that information, to remove the emotions away from it and figure out, well, how can I take this information, knowing how they're doing and knowing what's typical of the retail trader, and use it to my advantage? So let's talk about another light of, or another way of looking at this mirror concept. So in another light, what you see from your observation of the charts is based on your beliefs. For example, if you believe that range-bound, choppy price action is untradeable, then you won't be able to see any reasonable opportunities that will allow you to trade it. However, and I know this from personal experience, if you allow yourself to fully embrace the idea that the opposite could also be true, even for you, the small retail trader trading with small capital, you will be able to see the many opportunities to take trades during range-bound, choppy conditions while maintaining reasonable risk. When you take on a belief about a particular environment or situation, your brain will start looking for evidence to support that belief or those ideas that you're holding on to. This, in my opinion, is why most people getting into this for the first time struggle with accurately reading charts in real time and analyzing data points generated from market participation. The general population is sold a mysterious, fear-based narrative about the financial markets with insufficient data about how this environment really operates. One of the reasons this is done, in my opinion, is to keep the general population reliant on perceived experts, or quote unquote experts, for making investment decisions. There's also an entertainment component in there as well. These people that get behind the camera and get on the mic. They got to keep you entertained. They got to keep your attention, because that's how they make their living. But again, that's another talk for another day. However, once you realize that all you need to do is find the right set of beliefs, or once you realize this concept, or this perspective of the mirror concept, you'll be able to see that all you need to do is find the right set of beliefs based around your strengths and weaknesses, who you are. Then you can develop a skill set that will allow you to effectively apply who you are and all of that stuff to how you would analyze the participation of these markets. That allows you to fully take advantage of this binary price action in the best way that you can. And like I mentioned before, this price is binary because it's only going to go up and down. The sideways that we refer to is price going up and down in small ranges, but price is only going up and down. But in that's your true edge. So if you're struggling to find success that you're looking for, I would recommend to take a deep look at your beliefs, see what beliefs are helping you, see what beliefs are allowing you to see the picture with clarity, and hold on to those beliefs. Hold on to those ideas. And then also pull out any belief that is clouding your vision, virtually serving as a cataract to your trading eye. When you discover the beliefs that are not best serving your interests, you don't necessarily need to replace them or start believing in the polar opposite. For example, just because the belief of market makers being the entity that is out to manipulate prices and screw over the little guy, that's not helping you to make better trading decisions. Once you realize that's not helping you to make the best trading decisions, that doesn't automatically mean that you have to believe that market makers are your friend. Remember, the polar opposites are the extremes. Truth can be found somewhere in between those polar opposites. And I word it that way because truth is also subjective. Then this allows your brain to do its job of finding evidence to support the beliefs that are going to benefit you the most. So once you get your mind outside of the polar opposites, but you can see both sides and you understand that both sides can be true, that this opens up your mind and allow you to find evidence to what you hold to be truth inside or in between those two polar opposites. So what I'm saying is not an easy thing to do. It does take work. It took me a lot of work. I will say it that way. It took me a ton of work. And that's going to vary depending on your history, your past experiences, who taught you, what they taught you, the things that you're holding on to right now, the things that you believe in right now, the things that you hold to be that carry the most truth in your life right now. How much work you have to do is going to depend on all of this stuff. Some people are not going to have to work as hard at it as others will, but if you do need to work at it, it's going to take work. It's going to take a lot of awareness of self, being honest with yourself, plus patience and trusting the process. That's the mirror. When you start to recognize and use the mirror to your advantage, you will be able to see what you're really capable of achieving in this business. And you'll be able to see and find ways to do what others have said were impossible. There's a lot of things that I've been able to recognize, or a lot of possibilities that I've been able to recognize that I've heard other traders say that you just can't do that. So you'll start to recognize what could be identified as false narratives, but more clearly, you should be able to see those quote unquote false narratives as what they really are. as just other people's opinions based on their own perspectives or derived from their truths. But the mirror is always there. It's up to you to decide when and how you want to use it, but it's right there in front of you, waiting for you to use it to your advantage. So on that note, I appreciate each and every one of you for tuning in to another classic episode of Trader Triggers. As always, if you found this valuable, tap that like button. Let me know your thoughts in the comments. And if you're listening to this off YouTube on the podcast platform, remember to leave a 5-star rating and review, and leave a review for bonus points. And until next time, trade it easy.